Thanks for being with us here on Business Now. Well, the online real estate listings business REA Group, a sponsor of this program, today said underlying profit grew 23% in the financial year to around $564 million. The Reserve Bank's 2 interest rate cuts have clearly helped it to increase buyer activity in the third quarter, and that contributed to the News Corp controlled business lifting revenue by 15%. REA will also issue a final dividend of $1.38 a share. That'll take the annual dividend to $2.48. It also meant that REA Group was one of the top performers, in fact, almost the top performer in the stock market today, up close on 7%, $254.50 at the close. Well, earlier, Edward Boyd spoke to REA's outgoing managing director, supposed to be outgoing, Owen Wilson, about the results, an ACCC investigation into its pricing, and the company's plans to find a new chief executive.
Oh, the Australian business has performed incredibly well, and if you look at those results, it's really without any market tailwind. National buy listings are only up 1%, and that was rounded up to 1%. We've delivered 15% revenue growth across the group as a result. It's on the back of strong penetration of our depth products and a nice price rise and really strong audience growth across the year.
One thing that jumped out was property listings during the fourth quarter, down 8% nationally, and they've fallen a little bit again in July. What do you put that down to?
It's really just the comparables from last year. When you look at the year on year, they're only up about 1%, but it's varied across the quarters. Q1 last year was incredibly strong listings environment, and as we cycle over that, we're seeing those listings down, and that's what you're seeing in July. As we go across the rest of this year, those comps will get a bit weaker, and we do expect growth to return. We had the opposite in FY25, and so Q4 the prior year was very, very strong, and that's what you're seeing in those growth numbers. When you even it out across the year, though, it's basically a flat listings environment. And what that is reflecting is very strong, very healthy environment, but also healthy on healthy, which is sort of flat growth.
Yeah, rate cuts have obviously helped spur a bit of demand for housing in the past few months, and there could be a cut as early as next week from the Reserve Bank. I mean, that outlook then must be pretty good for FY26.
If you look at the property market outlook, as we said on the call, we expect another strong listings environment in FY26 over the top of FY25. The conditions are great. I think we're going to get a rate cut next week. Most pundits would have us get another one before Christmas, and then maybe even more into 2026. And so we're in an environment where rates are falling. We can see demand on the site, and demand is still incredibly strong. House prices are probably going to be stable to up. It's the perfect environment to sell a property, and so that's what we're forecasting when we say that listings will remain at these levels into FY26.
And the Indian business, you've several brands there, including Housing.com and REA India. Just explain your place in that massive market.
We've got 2 operations. So REA India is the envelope of the business. In July, we sold our Prop Tiger business in India, which is our apartment selling business. We're really just focused now on our housing core business, which is essentially the similar sort of business to what we operate here. It's got a website, and we've got the #1 app in India. It's an incredibly exciting market. It's the 4th largest economy in the world. It's growing significantly. They have a property obsession, a bit like Australia, in terms of growing family wealth. So we're very excited about the Indian market. We also have an operation that REA Australia runs in India called Cyber City. And this is a back office development function that helps support our product development in Australia.
And looking at the overall business, operating costs up 12% during the year. I mean, how do you keep them down? Are you basically forced to raise prices to mitigate those cost increases?
Look, a lot of that cost increase is what we call good costs, cost of goods sold. So, for example, we have a social media product called Audience Maximiser, and there's a cost to deliver that, a variable cost. And so when that revenue is rising, the costs go up with it. They're good costs because that's a very strong margin product. We also had the impact of an acquisition in that number as well. So, again, you strip that out, the cost growth isn't as significant. The reality is, though, we are in a tech business, and a lot of the tech costs are going up. Things like cloud computing, that type of thing. What we have done is we've restructured our business to streamline the throughput in our tech operation. We're using AI to deliver a lot of efficiencies, both in the way we code and how we develop products. And so going forward, we've guided to a lower rate of cost growth into FY26.
All right, one mention of REA Group in the media recently has been an ACCC investigation into competition within the sector and fees. I mean, how competitive is the property sector right now, especially when you see Domain being purchased by the US business CoStar?
There's strong competition in our market. You know, Domain has been a very healthy competitor for a number of years. When we look at price of our products, we always price to value. And when we increase prices, it's because we've actually increased the value of the product. And we're very confident looking forward we can continue to increase the value we deliver both to our customers and the consumers who use our site. And that will underpin any price changes going forward. Look, I need to make a point. It's just not illegal in Australia to increase prices when you're increasing value. And so we're very confident in our strategy going forward.
And Owen, last time we spoke, you announced you'd be stepping down in the second half of 2025. There's a bit of speculation in the market at the moment about your tenure, who might replace you. But will you still be finishing up before the end of this year?
Oh, we haven't agreed an end date for me. I've said to the board I'm going to be very flexible to make sure there's an orderly transition to the new CEO. We've said the announcement is imminent in terms of the new CEO. And I look forward to a transition to that new CEO. So I don't have an end date yet, but yeah, it should be towards the end of the year.
Owen Wilson, Chief Executive REA Group. Great to have you on the show as always.
Thanks very much.